watching Beyond Markets. Welcome. I'm Kenneth Igbomo. On today's show, we'll discuss some top themes that will impact Nigeria's economic outlook for the year. You can join the conversation with the hashtag Beyond Markets and follow my handle at Kenneth Igbomo. Now, PricewaterhouseCoopers says Nigerians in diaspora sent an estimated $25 billion in remittances to the country, a figure that translates to 83% of the government's budget in 2018 and 11 times the FDI flows in the same period. Andrew Nevin, the partner and chief economist at PwC Nigeria, joins me to discuss this and other themes they expect will shape Nigeria's economic outlook for the rest of the year.
We wanted people to really realize how critical the diaspora remittances are. And so we've started to say oil's not our biggest export, actually people are our biggest export. And of course we all know people in Nigeria that are educated abroad and then they're moving abroad to work in Canada, the UK, United States. And that's a huge flow, which as I said is bigger than oil for this country.
Interesting. But how do you see this sustaining the country going forward though?
Well, people argue that maybe we shouldn't have such a big diaspora. It's a terrible thing when someone goes. I'm not sure that's true. I mean, I think first off, from an immediate viewpoint, if someone emigrates from Nigeria and they're making hard currency somewhere else, they're sending a lot of money back in many cases, which is why we have such a big number. They're gaining skills there. They still love Nigeria. They still probably want to come back and do business here. So I think this is a huge strategic resource for us, people going in and out of Nigeria. It also shows what an open economy, what an open society we have, and I think it just makes us stronger. But maybe the biggest thing with the diaspora is we have such a highly qualified diaspora. It's the one thing that's sending a positive message about Nigeria around the world. So someone in Canada now works with an educated, they realize Nigerians are educated, that they're very skilled, and it raises our reputation, which is critical for us.
But how should the government strategize on this diaspora population?
Well, I think maybe we could take a cue from India. So, for example, they actually have an overseas classification of Indians. They make it easy to kind of come in and out on that. I think we could have more support programs for diaspora, more formal ways for diaspora who want to invest in this country. So what's happening is a lot of the diaspora want to invest, but they're investing in small things in their local area, which are often not successful for reasons we understand. Whereas if there was a more organized way for the diaspora to invest, I think we could get a significant flow into the country. And if you think about it for a minute, if the diaspora is not prepared to invest in Nigeria, how can we go ask other foreign investors? So if the people who know Nigeria the best won't invest, who else is going to invest in us?
All right, so you're seeing this more as a brain gain than a brain drain?
I think it integrates us into the world in a positive way. So I don't think we should be negative on the diaspora. Okay. And most of the time, the diaspora stays connected, and oftentimes they come back. So.
Okay, so let's get into the next one here, the second theme you put out there. So you're seeing economic growth coming in at 2.5% later this year, and you say the economic growth is sluggish, but it's characterized by slow recovery. Can you clarify this for me?
Well, we've said this consistently over the last year. We know we need to grow a lot faster. I think people on these types of predictions that are 2.5, 2.7, 2.9, 2.1, really, we don't think it makes any difference. We need to grow 6 to 8%. So whether our model happens to say 2.5, maybe we'll grow as high as 3 or 3.1, it still isn't good enough. So that's why we call it sluggish growth. So sometimes people have come out and said, we're recovering. We want to keep the message to people. We have not recovered. When our population is growing at 2.7, even if we grow at 2.5, we are still getting poorer in 2019.
All right, so what do you think should be the silver bullet for Nigeria's economy to get things going?
Well, I guess we would say that the thing about Nigeria is it's so big, there's no silver bullet. A lot of different things need to happen, and it's one reason why we've talked a lot about decentralization. If you want to have many pockets of economic activity, it has to happen all over the country. It has to happen in 6 or 7 big commercial centers, Kano, South, in the north as well. So we need activity everywhere. So there's no silver bullet. It's unleashing many silver bullets or many bronze bullets that can help move us forward. But there's not one policy that's going to unleash the economy. But we just need 200 million people all individually doing things that are pushing us forward.
Yeah, but the power sector has been much talked about as one that can galvanize the type of growth that we can see in Nigeria. If we get that right, that sector right, I think a whole lot will go well for Nigeria. And when you look at the potential for industrialization, because we have things like the AFCFTA coming in, and I think one of the reasons why Nigeria is holding back on getting in that bit is the fact that we know that we are not industrializing as most of the other African countries that we're going to be competing on the same stage with us, and we're going to see a lot of goods from other African countries flood the Nigerian markets, while we're not going to be seeing the same exchange from Nigeria going outwards. What do you say to this?
Well, but I would say that proves exactly our point, because our view, the way to get the power sector moving is to do less. Power is one of those things. If you look at the way technology has changed, it's so much easier and more economic to produce power in localized ways than it was 40 years ago. So this mental model of having a giant grid, giant power plants is no longer applicable, and it has not worked for Nigeria. If we simply said to states or regions, you sort out your own power, we have a lot of confidence they actually would. And Lagos, if Lagos was told by the federal government, sort out the Lagos power situation, we're very confident in 2 or 3 years we would have that level of power to do the industrialization. So that goes back to the point.
But at what price, though?
Well, I think at a very competitive price, because as I said, the technology has changed. You don't need a big power plant to get low cost. Gas turbines, for example, work at quite a small scale, just like modular refineries so it's an example, again, of we have to get a lot of people doing things, and the central government doing less, I think, would help us more. And if you take the power example, even the way it's developed in other countries, it's not a federal matter in Canada. It began at the municipal level, and then it just joined up the municipal grids to create a provincial grid. But there's no national power strategy. The provinces can figure out how to trade power among themselves. So I think we get a lot more people focused on power if there was a distributed or decentralized approach to making power.
All right, then let's move on to the government's fiscal deficit. You say this deficit will expand above the budget. I'd like you to clarify what you mean. And you say fiscal deficit to widen by 79%.
Yeah, I think in the paper that we show the deficit getting as high as 3.5% of GDP, right, which is worrying. I mean, first off, it's a very high percentage of the taxes we collect, and a very high percentage of the taxes we collect go to interest payments. So more than half of the taxes collected go to interest payments. So if we go back 3 years, we were saying at that time, and other economists, we're not really worried about the deficit. We need some fiscal expansion. We're investing in the future. We're investing to grow faster. The problem is we've had these 3 years and we're not growing faster. So now we're entering the point where the size of the budget deficit and the cumulative debt of the government is starting to become a little bit worrisome, because we're simply not growing fast enough. So if you just take that number, I think it's about 60% of the revenue collected goes to pay interest. That's an extraordinary number. It shows how high our interest rates are. It also shows how little tax revenue we collect. And it's starting to become a big concern.
And then funding the budget has been a serious problem for the country for quite a while now. How do you see us playing in the international markets for borrowing?
Well, I think it's going to become, in our view, more and more difficult for the reasons I said. 3 years ago, we looked like we had a very low debt level and it was manageable. We've come these 3 years, the deficit's creeping up, the debt's creeping up, and we're not growing fast enough to do it. Again, growth would solve the problem, and the finance minister, I think, came out yesterday or many times recently talking about the need to mobilize more resources. We collect very low tax revenue, 6 or 7% of GDP. We've said the same thing for a number of years. The problem we're having, in our view, is increasing tax revenue when we're getting poorer and poorer is quite difficult. So if you look at countries that have done very well on increasing their tax revenue, developing countries, so China over 30 years, India over the last 20 years, what they've done is brought people to the tax net when the economy is growing. So if the economy is growing 6, 7, 8%, you're feeling wealthier. Okay, now I'm going to come into the formal economy, I'm going to pay my taxes. But it's a very difficult thing to ask the population, if they're getting poorer and poorer, to come into the formal economy. And I think that's the struggle that the finance ministry and the country is having with these fiscal deficits right now.
All right, I'd like to take you up on another point. You talk about the fact that lackluster policy implementation impacts FDI and FPI flows. When you look at, the flows, investment flows into the country, what would you say is the major challenge for Nigeria?
Well, I think we've come out recently, the way we've expressed it, the sort of 4 big structural issues that are holding us back. One of them is obviously the PIB, and investment in the oil and gas industry has really declined. Foreigners are not quite sure how to participate. going forward. I mean, some people have said we're really a gas economy, not an oil economy, but we're not getting the investment in there. The other issue we talked about, power, again, I don't believe there's any foreign investor in any of the discos or gencos that we have because it wasn't structured in a way that would make sense to the foreign investors. And then, of course, there's the exchange rate regime, and I think there's been a huge amount of progress in making this more transparent and making it easier for investors and for Nigerians to go in and out of FX. But it's still a little bit confusing to the outsider. So when you're sitting in the boardroom in London or New York making a decision, you don't quite understand how the CBN policy works, you're going to opt not to invest.
Okay, but some others will say Nigeria suffers from a lot of perception risks. What do you say to those people?
Well, part of the problem is we have a negative reputation, right? So all other things being equal, we're going to get less foreign investment. So we need to do something about that. As I said, the diaspora is a very good thing that could improve it. But I don't think we have a national strategy to improve our reputation. If we want to get people to have an accurate perception of the real risks in Nigeria, which are lower than what they perceive, we need people to be coming to the country. We need people to invest. We need positive stories about it. We need them to come to the airport and be welcomed and not feel like it's difficult coming into the country. And slowly we'll change our reputation. But there's no silver bullet on reputation. We know we're struggling with reputation.
We actually did a rebranding some time ago, and that didn't work out as well as we wanted it to. Okay, then let's look at unemployment. You say it's going to continue to trend upwards.
Well, just mathematically, unemployment is not going to come down among young people unless we are growing at 6 to 8% and we're making more jobs. So if we're only growing this year 2.5% and yet we have so many young people coming to the job market, unemployment is going to be stable or even rising, as we say in the report. So again, it comes back to growth. I mean, until we grow faster, we're going to continue to be poor, and we're going to continue to have too many young people that are frustrated. I mean, it's very difficult, both if you're a graduate, as we all know. I mean, myself, everyone watching the show, I'm sure they're inundated with very smart young people that want to do something, and how do they get involved in the formal sector, whether it's intern or what they do when they're doing their NYSC. But outside of graduates, we have a huge number of unemployed youths. We don't have the vocational sort of systems that can bring them into, I don't even want to say formal employment, into some sort of employment. So it's a struggle for us.
I've been speaking to Andrew Nevin. He's a partner and chief economist at PwC Nigeria. If you're just joining us, Andrew Nevin, a partner and chief economist at PwC Nigeria, is with me today, and we are discussing themes that the economists at PwC expect will shape Nigeria's economic outlook for the rest of the year. Andrew, I'd like to get on to the next point here, which is oil prices. Had to call, if you had a crystal ball 4 or 5 years ago and you were seeing oil at these levels, a lot of countries would have hedged, sometime to get better pricing. But when you look at how things are going right now, this year we saw the OPEC cuts coming in there. For Nigeria, how do you think Nigeria should play on oil?
Well, to begin with, I think we've made huge progress in the last 5 years in realizing that we shouldn't be dependent on oil. And we talk about diversification, and I don't think that we've made enough progress. And to be specific, we still talk too much about oil. The reality is that the Nigerian economy should be robust, whether oil is $100, $80, $60, $40, $20, or zero. So that's the way the government should approach this, and should be sending that message out that even if it's $40, we're still going to have a plan. Even if it's $20, we're going to have a plan. And there is one government department, which I've seen a presentation I won't name here, that are preparing for a world of $0 oil, beyond oil, effectively on that. But in terms of planning for this year, I mean, I think we've been quite lucky from the viewpoint of pricing. I mean, it's at $66 or $67 today. I mean, I think that it's hard to see it dropping so rapidly this year below 40 on that. But again, the whole point of this exercise is let's get away from oil. We shouldn't be waking up every morning and looking what the oil price is.
But when you look at the OPEC cuts and we just had the recent visit of the Saudi Minister for African Affairs, in Nigeria, and talking about Nigeria complying with what they were all agreed on for the OPEC cuts. How do you see this impacting our stage and our economic growth going into the year?
Well, again, I mean, we need to get less and less dependent on oil. So probably from a strictly economic viewpoint, we're better off if OPEC cuts, and maybe we cut a little and keep oil at $60 or $80. But in a way, you have to remember what Saudi Arabia's problem is. If they don't keep oil at $100 sustainably, they have real social problems. They set up their entire structure for a high oil price, as a number of other oil-producing countries have. We want to get away from that. But in strictly short-term economic terms, if we cut a little and we're part of an overall program that raises it to $80, we're probably a little bit better off. But again, if it gets to $80, I don't want people to say we can take our foot off the accelerator and all the other things we have to do. Those things need to be done whether oil's 80, 60, 20, or 40.
Yeah, but we know the revenue problem the government has had in Nigeria last year, and oil is one of the major revenue sources for the government. So when you look at the budget assumptions and you look at oil, yes, give or take, oil has been pretty stable going into the year. What do you think should be when you look at the budget for Nigeria and how the government should raise revenues or increase its revenue drive, do you think we should be looking at other strategies to improve our non-oil sources?
Well, I mean, as I said a little earlier in the program, we've tried, and we need to continue to do that. So corporations need to come into the tax net, but it's a lot easier to do that if we're growing and the profits are going up. It's hard to do when the corporations are shrinking or they're losing money because of that. But that said, I don't think the government should stop trying to bring everyone into the tax net that should be paying their taxes. But one thing we might think about is, in this situation, what's happening is that the tax authorities are more and more draconian with the people they already have in the tax net, and that may be an error. In a way, we might be better off reducing the tax rates, but expanding the tax net to bring people in. But we don't have any choice. Oil could, as I said, I think it's probably going to stay above $40, but it may not. It could be $28 like it was a few years ago, and then we're at exactly when it was $28. I think I was in this studio, and I said, this is a terrible situation for us. We need to make sure the next time oil goes up that we're prepared for when it goes down. If I'm sitting here 5 years later and it's $28 again and we haven't prepared, it's just shameful on Nigeria.
All right, then I'll take it to the next point on inflation. You say inflation increases marginally and driven mainly by base effects,
Right. So, I mean, I think the thing about the inflation, though, is, I mean, that's obviously a very kind of technical economic thing we put in the paper, in our paper this time, and we have to do. But what's actually going on with inflation is everyone has their own individual inflation rate. It really depends on what you buy. So we have a construct as an economist to kind of put that all together into a single number. But to be honest, if we take different sorts of people, it has differential impact. If we have high food inflation, it disproportionately hurts the bottom of the pyramid. So marginal inflation reduction, it's not a bad thing, but it doesn't tell the whole story. What we need to be focused on is getting price increases down on the most basic things that the bottom of the pyramid buys, which beginning with food and telecom, basic banking, basic financial services, basic transportation services. But why are our prices going up? They're going up in many cases because our infrastructure is poor. So if you take the example of agricultural products, we end up having, I believe, about half of the tomatoes produced in the country never get to market, right? And so then the price of the market tomatoes is going up. If we had a better infrastructure, we wouldn't have inflation, we'd have deflation because we have a more efficient economy and prices could come down.
All right, but how would you advise the central bank on a strategy level to deal with inflation?
Well, I think that sometimes people overestimate the control the central bank has on. They only have a single lever, which is maybe two levers, which are the reserve ratio and the core interest rate set by the MPC. I mean, I think they've done a good technical job of it. I mean, when you watch, we've watched together the central bank governor, they're very on top of the issues. They're doing the best they can. As I said, the way to bring inflation down in this country is to have a better infrastructure, have better power, as we talked about, lower cost power, and then we would see inflation come down. So I don't want to put any more pressure on the central bank. They are doing as much as they can in the circumstances. All
right, then we'll still go to other things. Yeah, I think I should have taken this right off after we talked about oil. Then petrol prices, you say it may be readjusted from 145 to 145 naira per litre. We've seen that for the elections, the government has given a kind of a discount of 140 to the independent producers. Basically, they dropped down the pump price to 140 just so that people can move around and vote. When you look at that type of gesture, you are calling, you're saying this might be readjusted. So it really speaks to the fact that we could be paying less for oil, for petrol.
No, we're going to pay more for petrol in our view if it's readjusted. I mean, we've been consistent, and I think other observers have been consistent, that the problem with the fuel subsidy is, one, the subsidy ends up benefiting wealthier people because they drive bigger cars, and there's no reason we should be subsidizing with wealthier people. I mean, I think that subsidy is about 1 trillion naira in 2018. That's 1 trillion naira that we could put into infrastructure or put into something else. The second problem when you have this sort of subsidy system is it encourages diversion or other sort of malfeasance. And we all know when we have the fuel subsidy that we seem to be subsidizing a lot more fuel than Nigerians use, which means that it's ending up in other countries, and effectively we're subsidizing the fuel in those other countries. So then you might say, well, no, come on, Andrew, we don't want fuel to go up for the bottom of the pyramid. And then our response would be, well, actually, if you really want to help the bottom of the pyramid, we'd be better off just taking that subsidy and transferring it to the bottom of the pyramid directly. So in fact, and the government does something like this with trader money, where it sends 5,000, 10,000 naira directly to a trader. You could take that fuel subsidy and add it to the trader money and have a much bigger impact on the bottom of the pyramid. So we view that as a structural issue that we'd be better off if we didn't have the fuel subsidy.
All right, then what other issues are regarding petrol prices do you think can help make things better?
Well, as I said, I just think we need to deregulate it, and then we also need to really capitalize on the private sector to produce it. So I think we've shown that the government refineries are really never going to work, no matter how much money they come in. So it's not particularly that I love the private sector, but in terms of actually putting PMS into the petrol stations, I think the private sector is going to do a better job. And I think they're going to do Mr. Dangote at his scale, 650.
Yeah, because I'm looking at when you look down the line in the medium to long term.
Yeah, I mean, if Mr. Dangote's refinery comes on stream and we have many people trying to do modular refineries, I mean, I think we can actually solve this fairly easily over the next 2 or 3 years.
Yeah, but he's a private player, and then he will decide, because if the country is dependent on his production, I think he would have to come to some sort of agreement with the government on what the price will be.
But why do we have to decide the price that way? I mean, again, do we have to have a market distortion on it? And I think there are countries where you could subsidize or tax certain things like this and it would work. But haven't we shown in Nigeria that when we try the subsidies, it hasn't worked out very well for us. And of course, it's not like there's anything particularly difficult about producing PMS or fuel for the car. It's a very easy technology. It's very well worked out. Mr. Dangote's refinery, even though it's large, is still small on a world, not small refinery, but small amount, total output on a world scale. So the price is going to be set by the world scale. And if Mr. Dangote tries to charge Nigerians too much, we can import from other refineries, and we have modular refineries. So again, competition is going to bring us the right price here.
Okay, because I'm thinking, if he's not getting the right pricing for Nigeria, he can just export to other African countries just around.
But there's a world price for fuel, right? For PMS, and
yeah.
It's set by how much is the oil cost? $66, and then there's a little bit to refine it, and that works out right into the world price.
Okay, all right. Then let's look at the other things in here. You have uncertainties around population and population growth rate for Nigeria.
Well, we know this is a sensitive issue. We just want to sort of challenge a little bit and say, how do we manage the country? How do you manage individual state, LGA, if you don't know who and how many people are in each place? And so now, as far as I understand the history, I mean, the last census we had was 2005. It wasn't necessarily very accurate. We're now using numbers about the growth rate of population that we're not quite, maybe someone could illuminate us, but we're not quite sure on the accuracy of where these numbers, if you look at birth rates around the world, they've been falling. Urban areas in Nigeria may be no different on that. Has that been baked into it? So as far as we can tell, we've taken the 2005 census and we keep multiplying the population by 2.7% every year. And in fact, on the UN site, which keeps track of population in real time, I believe it's just ticked over 200 million. So it's telling us there's 200 million Nigerians. Now, if that's accurate, that's fantastic. Let's have a better view of that. Okay. It also goes to issues of identity. I mean, in the future, it's going to be very difficult to manage your own life or the life of a nation or a state unless everyone has a unique identity. So let's get on with that project.
Yeah, so we'll see how that goes. But then the final bit, which I really wanted to also stress on here, is the currency. You say the exchange rate will depreciate in the later part of the year, and you're calling it to about 390 to 415 naira.
Well, we don't want to call in the sense of making a prediction. What we've done is say our modeling tells us that let's call it the fair exchange value is about 390 to 415. Now, why is that the case? Well, for 3 years, after we had the kind of crisis at the beginning of 2016, we've had, when oil came back a bit, we've had the parallel rate at 360, right? It's been very stable. Why has it been stable? Because we've run a current account surplus, and the central bank has effectively sterilized that, which means to keep the stable currency, and they've built up the reserves. So that's all fine. But of course, we have higher inflation than other markets, right? So, or U.S. dollar, for example. So if the U.S. inflation is 2% and our inflation is 15%, economic theory tells you would depreciate by 13% a year. So we've had 3 years of that, and we haven't had that depreciation.
I've been speaking to Andrew Nevin, is a partner and chief economist at PwC Nigeria, and that's it on Beyond Markets. Thank you for joining us. Remember, you can watch the show at 5 p.m. West African time daily and have access to all previous episodes of Beyond Markets on our website at cnbcafrica.com. You can also stay engaged with the hashtag Beyond Markets and follow me at Kenneth Igbomo. Do have a wonderful day.